Hi everyone, and welcome to the next video. So I know in the beginning videos you've heard me talk about order block, liquidity, when price runs a low. So in this video, we'll be explaining everything about liquidity and how the market truly works. So the whole ideology of liquidity and liquidity pools are that you have two types of liquidity in the market. You have internal liquidity and you have external liquidity. So what does that exactly mean? So the whole ideology of liquidity is highs and lows being ran because you have orders resting above every high in the market and every low in the market. But at the same time, you have trading ranges. So when you have price moving within this range, right, there's liquidity trapped beneath every high and every low, but there's also liquidity above the high and the low of the range where price is. So you have internal liquidity within your trading range, and then you have external liquidity above this high and this low. So a lot of times you'll have price come up, right? Come down, fail to break that high, fail to break the low. And what's next? Price will come up, it'll swipe external liquidity. And a lot of people are thinking that's a new high, when in reality it is, but where are you at in the market? Where's that next liquidity point? It's down here because that never ran. So price will come, it'll target that internal liquidity, we'll get that pullback, you'll get that confirmed shift in structure. And where will it target? The next pool of liquidity. So liquidity again is beneath every high and every low and every external point of a trading range and every internal point of a trading range, right? So again, liquidity rests beneath every high and above every low, and vice versa on an internal level, which some people might call consolidation, but we call it accumulation because price accumulates before a move happens, which is a lot of times why you see price explode or price, differ. So now we will go ahead and take a look at it on a chart with actual candles, because some of you may get confused when you think, but what about structure? And it goes hand in hand when we have liquidity runs. For example, when a new high is formed and a new low, and we have a run on liquidity. Same with the GU example that I gave in the past videos. What happens? Liquidity is ran, we run a high. So what comes next? That next pullback, because liquidity is ran, we're going to have that pullback. But the thing is the pullback going to form a lower high, or are we at a significant level in the chart where we're waiting for structure to shift, and that's a valid liquidity run for overall order flow and structure to shift, or for it to be a run on liquidity on an internal level, right? Create that pullback to that structural point, that order block, and then go higher. So let's take a couple looks at examples on the chart. Go ahead and remove all this. Okay. So here's a perfect example of how liquidity works. So tying in all of the things we've talked about before, right? Here's a low that was ran, AKA liquidity. So this move down ran liquidity, and it ran external liquidity. Now, how do we know this was external liquidity and not internal? Because this is this trading range, right? Sorry. This is this trading range. So we can see how price is playing all in this range, and now we're coming and we're forming what? A new range, right? So now we're within this new trading range, better known as our accumulation, consolidation, but we have our range here and we have our range here. So once we're coming down, we're running an external point on internal. So I apologize. We're running an external point of liquidity, but we're also forming a new low. So in our minds, what are we thinking if we're tying everything together? We have our order blocks, supply demand level. Again, that leg, this is that last structural. This is that last structural point of supply demand. where we created that high and then we created a new low. Now we need to know, because once liquidity is ran, where are we at in the market? Is the market going to shift? And are we going to buy now? Or is the market shifting and the flow staying the same and we're still going lower? So we need to look at structure and where we're at in the market, and also with utilizing our higher time frames. So seeing where we're at in that current trading range, which is right here, we can see where we're at on the daily. So we're still bearish again, right off the bat. We see where sales continued from that leg on a higher time frame, and that this was simply a pullback. But the pullback that created those buys reacted from what? A run on external liquidity. So we have that confluence there, and also this clean traffic where we're going to take that mean threshold, which is the 50%, which we'll get into later on. So we have two clean levels of where price can pull back to continue these sells, unless, again, what? Structure actually shifts, which it didn't, because it didn't break that higher time frame high. So we'll go back into that range, and we'll actually look at how liquidity was played out here, right? So again, we have to be aware of every point in the market. So on the daily, we know where we're at on potential pullbacks, but as far as our 30-minute goes, what happened? And so again, we don't trade without any reaction, no structure being formed. So price comes down, right? Price comes down, we have that run, and now we're starting to pull up. The only issue I have is how liquidity and structure is working. When we pushed up here, we failed to break this high, and now we failed to break this low. So we don't have a higher high or a higher low. We have two failure swing points in the market, and we have our leg. So what I'm waiting for now are two things. I'm waiting to see if this low is going to be ran and liquidity will be formed here, or if we're going to come above this failed swing in the market, run liquidity and go lower. So I'm looking at the run on liquidity, which is going to run a higher low on an internal level, because now we're starting to form our new trading range and we ran external, or if next structure is going to be formed. So since we already ran a low, my next point I want to see is a pullback into this level to run some type of internal liquidity on a high point. But at the same time, this low was never liquidated because it failed to break any type of structure. So now I'm simply just waiting. So at this point, right, we have all of our areas of interest. Price comes up, and what do? We form a new high. So now a high in the market was formed, but at the same time, it's a run on liquidity. So unless structure starts to break down how we did on our structure video, I'm not looking for sells to come beneath this low, because we're forming higher highs and higher lows. Even though we ran that high on liquidity, we have to see how the market's going to adapt. So again, we ran external. We're looking for pullbacks to sell out of our point of interest, but we have to wait. So that was that last structure point where we have that up candle, our order block, down move. And that's what an order block is. It's the up candle before a down move that takes out a significant low. But we'll get into that. It's also better, supply demand, point of interest, area of interest, which we have depicted here. So price comes up, we take out that high, right? Which is a run on internal liquidity. So we could look for sells here, but only if they're confirmed, because structure has to shift. So once you run this high, what does price do? Price comes down, right? It respects the supply demand zone. It comes up, and what do? We form a new high. So we ran internal liquidity on the high. In order for us to go higher for a pullback, because structure has been validated, what do? We have to run internal liquidity now on an internal level, which is all of these lows within here. This is our external, but these are all our internal lows. So look at what price does now, so you can get a whole better understanding of how the market truly works. Price formed a new high. It disrespects this low. Now, for this to be confirmed, price has to break the low again. So price takes this low, right? Say we bought here, formed a new high, got stopped out, or even broke even. Price fails to make a new high. Now, if this low gets taken, price will be confirmed, but at the same time, we know that the market has to target internal liquidity on a sell side to go to a buy side, because we already took the buy side. So when price comes down, this first push identified and tells me here that we failed to take this low. Just how we failed to take the low here, now we're failing to take the high. So wherever price sweeps to next, as it did here, I'm looking for buys as opposed to sells. So price comes down, we clear all this internal liquidity because this is no structure has been formed yet. No structure here has still been validated. So price sweeps all these lows, all this internal liquidity, but this is not valid structure because there has been no confirmed higher high and higher lows. Like if price were to go right like that, as it did here, where we have confirmed low, fails to make a high, and what does it do? It confirms the low again. So you have to tie in structure with liquidity and how it's valid. So again, what do? We take out all of these lows, all this internal liquidity, we come up and we're starting to break structure. So we break this last structural high, right? And now what's coming next? We're looking for a pullback to buy anywhere in this structural leg, our lower high, and we're looking to run this next high, which is that liquidity point, and come into our external point. So we come in here, price comes up, makes that new high, pulls back to that leg, and then we have our buys. And what does price eventually do? It liquidates that high. But look where we're at in the market. So we're coming into that external trading range from all this internal pullback with structure. So what are we simply doing now? We have a confirmed run on liquidity on an external level, right? Because we're out of this trading range right here. Right? We're out of this whole trading range. So we come out of there, price confirms that liquidity run. We're in this, now we're coming into this external trading range. We have confluence on this structural push on that lower low. This is all a pullback. We have confirmed runs on liquidity on the buy side here and on the sell side here, right? So now what are we looking for? Price to come to this sell side because we ran it on the buy side on internal levels and external. So now we just wait for that confirmed structure. So price comes here, right? Confirmed liquidity run, confluence with the order block and our clean traffic. Price comes and moves down. Here is our first break in structure, meaning our new lower low where we broke structure and it was confirmed. Now, some people may be confused again, like, oh, is that a run on internal liquidity to play off this zone to go higher? It could be because price could have higher objectives. So we're going to look at how it's reacting off the liquidity run. What do we get here? Price pushes up, fails, comes. What do we get? We get a failed higher high. So that's a failure swing in the market, and it respects our order block, which is our up candle that took liquidity for the down move. So here's our order block, that gray candle. And now we're waiting. Boom. Price has officially been confirmed. Structure has shifted, and now we're targeting this external liquidity pool. So we have confirmed structure, we have confirmed liquidity, and now we're targeting this external level. Now, where are we going to look for our sells? So price has been confirmed. Again, what are we looking at? The last up gray candles before the down move, because that's our order block, aka supply demand zone, right? So we're going to depict this whole level. And again, this happened at London open. So you have your timing. We have all of our levels off the higher time frame. All our liquidity is confirmed, right? Boom, you get that small break and pull back to where? Supply demand zone, order block. So right here is our low risk sell. And where are we targeting? Our external liquidity point. So we have everything tied together with structure and the whole ideology and concept of how liquidity works with highs and lows. And that's how we know we could have some retail traders will put their stop all the way out here, but we know liquidity is confirmed and so is structure. So we know that this high is not going to be ran because it doesn't need to run any internal liquidity. So we'll have a tight stop, and where are we going to target? That low. So we run a clean 1 to 7.5 R, right? Everything was confirmed. And now look at the immediate reaction. A lot of people are thinking this is a big pullback, right? And that's a lower low, which is correct. But what did price do? Price ran external liquidity outside of this range. So what's going to happen by nature? Buys are going to happen, but where are buys going to come into? That's why we look at our higher time frame. So right here, buys come in perfectly into our structural points. So right here, we don't have any clean legs or any clean areas, right? So we wouldn't be looking for sells here. I would be looking to see how price wants to react here. Only issue is this push up ran zero liquidity because there's no higher low here. So this more or less to me is going to be an objective or a fake zone, which we'll get into later in the course, to come down, right? Swipe again, what? Internal liquidity. This is why you have to utilize all your time frames, because you need to know where you're at in the market on a higher time frame point, because a lot of people will be selling here, right? But at the same time, this is still internal to the higher time frame. So you have that internal run, and where's price coming into? The last leg where the push happened. You have a clean order block there, a clean zone. And what does price even do before it takes off? Clears liquidity. No matter what, liquidity has to be cleared for every move to happen and to be confirmed. This ran liquidity. That's why they didn't take it out when they created that ping pong, but they took out internal liquidity here, right? So going back into the buys that occurred here, this is how you would have taken them. So we ran external liquidity, and what's going to happen next? A lot of people are looking to sell here, but why are these sells not valid? Because the next point is the next external point, which will be here, right? That last high. So price comes up, right? We don't break the structural high, but we fail to break the structural low. So what are we looking for again? The next run on liquidity and the next structure to be formed. So here we have that area of interest to see how it reacts off of, right? So you have all these structural points. And I would just be waiting for trades in here because I'd be wanting structure to be confirmed. So even though price hits that fake zone on an internal level, we have a break. And this is where I would be very careful. But this is why a higher time frame is always correct. So you have a confirmed break, run on internal liquidity, fails to make a high, and what does it do? It makes a new low. So the only issue is with this, even though this makes a new low, where are we at in the market? Like you have to really know where you're at in the market and utilizing your higher time frames and your runs on liquidity. We already ran the external point here, so why would price come all the way back down? It wouldn't. It's going to move to where? All these external points that haven't been ran. But let's just say you took sells here. So the first thing is there's no clean area to sell from here because everything has been pulled back to and mitigated. Even though we had that breakdown, this is a run on internal liquidity. So while people are looking for sales on a retail mindset, on the smart money concept and how we trade, what are we looking for? What happened first? Run on external liquidity, pull up to this internal point, even though, and this whole move is a higher high. So what are we looking for? The pullback to create the lower low. Price runs internal liquidity, right? Also, this was at London Open. You have a break right there on that last, because all this, even though this is one whole leg, you have to actually look at the leg with structure. This is a whole leg, but what is it really? Here's your leg, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. So you have all this structure within this whole leg as opposed to this one actual whole leg. So price runs internal liquidity on, and we know where our overall order flow is, breaks that structural point high, comes down, respects the block that took internal liquidity, and now we're moving to this external pool. And as you can see, price moves up and it gives us the buys. Again, this is more or less a no trading range. As you can see, what are we waiting for? So this, I would have been looking for buys all in here because that's that leg, lower low, lower high, and this was not confirmed. Price comes down, doesn't take the low, but it fails to create a high. So what are we doing? Wherever liquidity is run next, that's where we're going to look for the next move to happen. So again, no low took in, no high, boom. Run on the right. We run all this internal liquidity. We're at that next structural point. So this is again the pullback in structure to where internal liquidity is ran. We're targeting this high because that's our external point, and we're just waiting for structure to be confirmed. Right? Again, so we hit our level. Price isn't confirmed yet, so we're just waiting. There's that run on internal liquidity off an external point. Again, no structure has been confirmed yet. Again, fails. Here we have clean lows. So what happens here? Liquidity is ran, and you think, oh, it's going to be confirmed, but look at what price does exactly next. We take that last high out, higher high. We come in, lower low. This wick is not taken. It gets very close, but it doesn't get taken. So there sets up your buys to that external point because we ran this whole external range and we're on that higher time frame basis, which is the whole leg that created the move. So you have liquidity in place, you have structure. And what does price do? It slowly starts to break down before it completely melts. And now where is it going to target again? Well, we already know based off our higher time frame that price is going to start targeting what? All these next lows. So this is going from internal points of liquidity to external points. So again, even though where price started, it ran that external point, we have lower objectives based on the higher time frame, and we came into an external point already. So now we have to run the next external point on the sell side because we took it on the buy side. So this would be that next targeted low. And until that gets ran, we wouldn't look for buys. As you can see, once it ran, it creates buys, but buys to the pullback to what? Again, that ran external liquidity. You can see structure shifted and it melted. But again, these buys weren't valid. It's just a pullback. So any sell would have been validated because you have external run on liquidity. You have a new lower low. And now there's no structure confirmed here. So again, what am I waiting? If this low gets ran, I'm looking for buys. Once structure is confirmed, once that high gets ran, what am I looking for? Sells, because structure has to be confirmed. So you have a whole leg here. You get that false push down. Again, no structure was confirmed. There's your internal run on liquidity. So that's why buys occurred there, but you wouldn't take any of that and that's not even a confirmed structural break. Price comes up, takes external liquidity, right? Comes down again, takes external liquidity, higher high, higher low. Any of these buys would have been valid. You wait, it reacts off that order block. And now what does price do once it hits? Right off the bat, and it's time in and time out. Price creates a low. Is it confirmed yet? Nope. It comes up, creates a high. But what is it really doing? It's taking internal liquidity because we didn't take any internal liquidity yet. And you have to wait and see. Is it going to form a new high? Because if it is, this won't be valid. Fails to break the low, but it fails to break the high. Boom. You get that confirmed structural break. Pulls back to where? Our order block. And let's just say you weren't comfortable taking that. It breaks structure again. So at this point, structure has confirmed its structural shift. Price comes down again, right? Because we're breaking that low. Where does it pull? The last up candle before the down move, which is our order block that broke structure. So right there, you have low risk sells, and then you can keep holding it, or you could just target this low. Again, clean risk to reward ratio. So you have tight stop, target that low, and you run a clean 1 to 5. So you don't have to force any trades where nothing is confirmed. You wait until your bread and butter setup happens. You wait for your internal run on liquidity, your external run, and you wait for confirmation and structure to be confirmed so you know where actual order flow is, tying in your runs on liquidity, whether it be external and internal, your confirmed higher highs, higher lows, and how structure and order flow is actually forming, and your higher time frames to where price is. Because just off the higher time frame, you wouldn't have been caught in any buys just because you know we're bearish, and everything is just a pullback to do what? To sell. So you can scalp those small buy positions, but really we should be looking for any external points to be ran just to move lower, right? So going from just an overview basis, we have our higher time frame areas of interest, but liquidity has to be confirmed. So again, this point had to be ran. It got ran. We created a trading range where nothing was confirmed here because we had no breaks. That was that last run on liquidity on an internal level within this range. Price comes, we respect it. Takes what? external liquidity on a range that was formed at this point, a full breakdown. Even though this ran external, look at how it's reacting off of it. This is how you know this is not a valid supply demand zone or order block, because no structure was broken to the upside. Here it creates structure, runs it, so you have your external run on liquidity within this range, but it's still that internal run on the actual move that occurred. Price breaks structure, breaks down again, lower low, pull back, and look at the overall shift on then we just target from the higher time frame all the way down, because this all was just a pullback. And once it engineered liquidity and we had that successful run and structure shifted, everything was confirmed. So we have our time frame, we have our internal and external runs on liquidities on how price targets lows and highs, we have our structure confirmed, and then we have our overall targets and where we're actually targeting in the market. So I hope this helped and really cleared up the concepts of liquidity. If you have any questions, feel free to ask, because I know it can be very confusing at first, but we'll show more examples along in the course. Just remember, even though you have structure, no matter what, lows and highs have to be ran. When price fails to break a high and fails to break a low, they're going to target a lower high to engineer and create liquidity. And then you have to wait for structure to be confirmed after that. So for example, right, higher high, higher low, higher high. This higher high was still a run on liquidity, right? Lower low, okay? Any little structural points in here are internal runs. Higher high, external run, higher low, internal. But what happens? We fail, right? We fail. So what do we have here? We have our range of internal liquidity that's going to target an external point. So price comes up. Let's say it still doesn't take that high because this high was taken somewhere else. There's your internal run. Boom. There's your internal run. Now, what are we waiting for next? Structure to be confirmed, because we ran both sides of the market. The only thing is this was external because of how price reacted. So you wait for price to pull up, break structure, structure be confirmed. A break in structure is when we break a lower high. That's a run on liquidity again, but we ran internal liquidity already, so we're not worried about this high getting ran. Price pulls back, we respect structure, and now where are we targeting? The next low on external liquidity. And that's how you tie together liquidity and structure, and how failure swings and structural points are validated within liquidity. So no matter what, structure has to be confirmed, but also every high and every low on an internal trading level, which could be consolidation, and external level, which are your, as people want to say, support resistance breaks. That's the thing, because that's why we don't trade breaks and retest. We target every liquidity pool. And knowing on the higher time frame where you truly are at every point aspect in the market, because this is how the market truly moves. And we'll get into more detail and depth with timing and examples, but just know liquidity rests beneath every high, every low on your trading ranges, which is your internal, and your external points, which are your breaks. And that's how price moves, because price cannot move without running any type of liquidity, which is why you get those failure swings in the market, and why as soon as price takes out a higher low, it moves the other way. So the market is designed to induce on every aspect, right? So if we remove everything, what happens? A lot of times with retail traders, you have your range, right? We're consolidating, right? Price will like come, it'll take out internal, it'll come, it'll take out internal. Traders who trade in this are getting lost. Boom, you ran external, and what are people thinking? Oh, breaking retest of support. What does price do? It targets the next external point, because no structure was confirmed any of these places. The only thing that was confirmed was liquidity. So now you wait, because every liquidity was confirmed. Price usually will pull back, and then we'll continue to the next point wherever we are on the higher time frame on the chart to run liquidity. And this is the whole reason why retail traders and people get trapped and stopped out, is because the market targets liquidity and forms structure based off of how liquidity is ran on internal levels and external levels. So I hope this helped you guys see the market in a new way, take everything you've ever learned and completely throw it away and really open your mind to how the market's moving and how highs and lows are taken, because beneath every high and every low, that's where orders are resting in the market. So we'll get into more examples and more videos and really tie everything together. But I hope this helps. Please take notes, watch this video as many times as you do, and look at the examples, because it's very important. Without liquidity, the market does not move and it does not work. So I hope this helps, and I'll see you guys in the next one.